We're moving on to the markets now, starting with the BRVM. The BRVM 10 index closed trading on Thursday at 245.02 points, up by 0.37%. Meanwhile, the All Share Index, which is also the BRVM composite, gained 0.29% to close at 217.57 points. The total value traded climbed to 323 million CFA francs. And the currency for the region is trading at 503.78 against the US dollar, now putting its year-to-date change at 0.90%. And moving on to Ghana, the GSE Composite Index closed trading on Thursday at 1,866.71 points, down by 0.03%, keeping its year-to-date change at 55.6%. On the other hand, the GSE Financial Stock Index closed at 1,654.09 points, down by 0.34%. The year-to-date change for that index stands at 59.07%. While on the currency front, the Ghana CD closed at 1 CD 99 pesos to the dollar, and the year-to-date is at 4.66%. Well, back here in Nigeria, the NSE All Share Index closed up by 1.76% to 38,016.80 points. Now, the year-to-date return currently stands at 35.39%. Well, let's get more on expectations for the Nigerian equities market and some corporate news received in the week. And for that, I'm joined in the studio by Jimmy Ogbobine. He's the head research at Consolidated Discount. So thank you so much for joining us, Jimmy. Well, let's start off with the performance of the Bourse yesterday. I mean, we saw it close at 1.76%, once again hitting the 38,000 mark. Now, what are your thoughts on the kind of movements we're seeing lately in the market?
Well, quite interesting actually, because it's a staggered week. I mean, a midweek break, so you really do not expect a strong rally from the markets like that afterwards. But you know, there's so much talk now of domestic investors coming in. So I think for the first time in a long time, we're actually seeing demands from two fronts. We're seeing very strong domestic demand. We're also seeing very strong foreign portfolio investors. You know, so from the two ends of the market, you're actually posting very strong demand for equities at this point in time. Domestic investors who stayed out of the markets all through the period of the law, you know, when there were real bargain opportunities, are heading to come back. PFAs who feel they've missed out because, you know, PFAs actually try to measure their portfolio. So you really need an aggregate of all your asset classes. So many PFAs had actually come down as low as 9% during the market correction. They'd come down 9% in terms of equity exposures to equity, while they have a maximum of 25%. So many of these PFAs are now trying to show up investments in equity classes. So as long as you see such strong demands, then I think the 40,000 mark, which many analysts have projected, may actually come to pass.
Well, we'll just keep on looking forward to that. Well, let's move on to some corporate news out of the market. Now, we see Ashaka Cement reported about a 65% decline in the first quarter earnings per share to 51 kobo. And we also see the revenue fell about 2% to 6 billion naira, while profit after tax dropped about 10.2% to 1.13 billion naira. What are your thoughts on these numbers?
It's actually very startling. You really wonder why there was such a steep decline in earnings. But I think it's possible management knew this. You know, Lafarge had already announced a planned merger between Lafarge WAPCO here in down south and Ashaka Cement, because they're both owned by Lafarge, the French-based cement maker. Unfortunately, the host community in Ashaka had risen up against this planned merger because of tribal sentiment, saying things like, oh, Ashaka is the brightest, is the biggest company in the north right now that is actually commercially viable. And by merging it with a company in the south, then you're sort of ceding ownership of a northern company to a southern company. So a lot of misinterpretation by the host community. But it seems now with these kinds of numbers, because Ashaka has always announced a planned expansion which has never come to pass. So the company is actually running on full capacity. So there's really nowhere the numbers will come from now in terms of earnings or profitability, which is why Lafarge may have wanted to merge. So now, with these kind of numbers coming in, so maybe it will be time to go back to the host community and say, look, this is a company in decline. The only way we can up the stake of the company right now is by merging with Wekoro. So actually those numbers seem to actually put it in context now.
Well, I hope that's really communicated to the host community, for the company to move forward. Like you just said, it's really important they get to understand where Ashaka Cement stands at the moment. But then looking at also their books, it shows that the decline in profits reflects higher raw material and production costs. Now, how can this be managed? And what, in your opinion, would this mean for future earnings release in the year?
Okay, now let's explain the geographical location of Ashaka better. Ashaka is based in Gombe State, which is northeast Nigeria, northeast/north central Nigeria. And you know what's happening there right now. There's increased military action because of the insurgency. Yeah. So there's a slowdown in construction, there's a slowdown in building, there's a slowdown in real estate. I mean, the only thing going on right now there is the military action. And the military action doesn't require cement production. So for as long as this continues, you really wonder where Ashaka would get its numbers from. So on one hand, Ashaka as a company has failed to expand. It has failed to raise capital for expansion. There's so much. The transport issues there are really bad. When you talk about gas, for instance, every cement company in Nigeria is trying to run on gas. Who's going to pipe gas to Ashaka? Who's going to pipe gas to Gombe State at this point in time right now? No one's going to do that. LPFO supplies have been distorted. It affects every cement company. Ashaka is more exposed to that. Then on top of all that, you now have, after selling your goods, then you do not have a ready market to actually pick up these goods. So they actually have lots of issues on one hand. Some are exogenous, some aren't. So at least that which management can clear, which is to merge, let them clear.
All right, then. Well, moving up from Ashaka now, let's take a look at Dangote Flour. Now, it swung to a third quarter loss per share of 58 kobo. And then the revenue also fell by 16% to 44 billion naira, while an impairment charge of 1.4 billion naira and higher finance costs, resulted in a loss of 1.8 billion naira for the 9th month to September. What are your thoughts on this release?
Tiger Brands of South Africa just picked up Dangote Flour, and before they did that, Dangote Flour used to be the laggard in the Dangote group amongst the listed Dangote companies. It's been suspended twice before now for late filing of accounts. So that just tells you that they've got real administrative issues within the company. So now that Tiger Brands has actually picked up the company, I believe these figures more. And I think it's better to come on a clean slate now, especially with those kinds of impairment charges you see. So it's part of probably the new revelations coming up now that Tiger Brand has taken over ownership and management very principally. So I'm not surprised, like I said, Dangote Flour has always been the laggard in the Dangote listings. And now that we have a new owner who's probably trying to clean up and come clean on all sorts of things. So it's actually not a surprise. So maybe when management comes out and releases more details of what it's actually doing, what it has discovered, and strategic plans going forward, then, but for bargain investors, bargain hunters, it will probably not be a bad time to actually see what they can do right now with